be showing you how I combine the Fibonacci retracement tool with market structure to get a high probability trading zone. So I wouldn't want to waste much of the time, and I hope you understand or you know the Fibonacci retracement tool. And this is the tool right here. This is the tool we're talking about. This is the tool we're talking about. And we're also going to combine it with market structure to identify high probability zones to go into for trades. All right, so first of all, we should be able to understand market structure. Here, I mean identifying highs and lows in the market, identifying the trend of the market. Once we are able to identify the trend of the market by seeing if it is having higher highs and higher lows, then we know it is in an uptrend. But if it has a series of lower highs and lower lows, then we know the market is in a downtrend. All right, so we need to be able to identify the swing points of the market. The swing point is in an uptrend. We identify these swing points. We identify them in the market, and we also know that each time a market is moving in any trend direction, like in an uptrend, if it goes up, forms a high, then comes down, then it has to break this low to form a higher high. This high here, I mean, to form a higher high. So breaking of this high is what we call the breakout structure. Then it pulls back. After there is a breakout structure, there's always a pullback. There's a pullback, then it goes back again. So we are going to be considering this particular zone where the market breaks structure. We're going to be considering this particular zone in the market. The same is applicable to the downtrend. We have to look at where we have those flip zones. We call them flip zones, and very important. That is very important for this particular trading strategy. All right, guys. So now, so after identifying the trend of the market, the next thing we will do is to identify the highs and the lows. You identify them, then bring out your Fibonacci tool, then try to draw it from the end. If it is an uptrend, you draw from the end of from the beginning of the swing, that is from the swing low to the swing high, to see where you have the 50% mark on the Fibonacci tool, where it falls. You know, normally the Fibonacci tool has levels on it, so you'll be considering the premium and the discount zone. In case you do not know, the premium zone is the zone above the 50 level on the 50 level on the Fibonacci tool. Let me bring out the tool so that we look at it and understand it. But this is the tool now. One moment. Let me make these lines bolder so that we can see them better. Increase the pixel to 3 pixels and change the color maybe to black so you can see it well. All right, this is better now. As you can see, the Fibonacci tool has this. It has these levels. There are more levels than what you see here. For me, I have 0.0, 38.2, 50.0, 61.8, and 100.0. These are the ones I left. If you not used it before, it will be on the default and it will contain more levels. Then you will have to use the pencil icon. After bring out your Fibonacci tool and drawing it, you press and hold it. Press the pencil icon, then you go down to where you have levels. You press this pencil icon, then you can either add or remove levels. If you have so much levels, you can remove them by pressing. Once you tap on this this bin tool, this bin object here, once you tap on it, you'll be able to delete. See what happens once I tap on it. Then it gives me option to delete any level I want to do. I will delete, but I do not want to delete any level. So, and if you also want to add another level, you need to click on the plus sign here. In case you need to add a level, you just click on the plus sign, then you'll be able to add a level just like this. I just added another one, then it will give you 0 mark. You type in whatever you want to type in. But that's not what we want to do today, guys. I don't want to add any level. I'm just showing you in case you don't know. So I go back. All right, so that is it. These levels are what we are going to consider now. Then this level 50 that we have here is what we know as the equilibrium level. The equilibrium level. Then above the 50 level, we call it the premium zone. Then below the 50 level, we call it the discount zone. So what is expected is that once price crosses the premium, the equilibrium level to the premium zone, we expect the price to fall back to the discount zone. And once the price gets to the discount zone, we expect the price to go back to the premium zone. So after drawing your Fibonacci tool on the chart and you discover the price is in the discount zone, you should expect it to start buying after a good confirmation. Maybe you see a reversal, or so if you discover a reversal, a bullish reversal in the discount zone that's below the 50 level, then you know that the price will be heading to um, the premium zone. Or if you see a bearish reversal in the premium zone, you should expect the price to sell down to the discount zone. All right, so that is what usually happens. So these other levels you see here, 61.8 is one of the major levels we expect reversals to occur after the 50, because most time once price hits the 50 level, it doesn't reverse immediately. You can drag till 61.8 before it reverses, or except it doesn't want to reverse at all. Then we also have this 32.8. Once price gets to it in the discount zone, it tends to reverse. That's is a very high probability level on the Fibonacci tool. All right, guys. So let's see how we can apply it to work. Let's apply it. All right. So now, as you can see, I'm on a chart now. I am on Boom 500. One moment, please. I'm on Boom 500 index on the 15-minute time frame. I want to use 15 minutes this time around. Now, what I usually do before now is to always identify the trend from a higher time frame. Now, I'll mark out my zones. I mark out my zones like I've done in previous videos. I'll tell you, you mark out your zones where price has acted and reacted several times. Now you can see that price has reacted in this along this particular zone quite a number of times. You see, this is a very strong zone, so I mark it out. Then I expect this happened previously, so that even currently if the price comes here, I will know there's something must happen around here. I'm expecting a reversal or a reaction in the market around here, so going backwards, you can see there was reaction. So I drew this thing previously before the price even got to this level. I already drew it and got it. All right, so now let me show you what happened when how I used this tool to determine, because I took a trade somewhere here, though I did not record it, but I have to show you what happened. All right, so this is the tool now. If you look at the market now, this is a high, a low, this is a high, and this is a low, this is a higher high, and the market came down and started retracing, but it couldn't go far. It came down. This is the actual swing point. This is the main swing point of the market, which is this one here. Is the main swing point of the market. So then it started reversing up. So what I did was to bring up my Fibonacci tool. I brought out the Fibonacci tool. Since the market is descending, then I might have to draw the Fibonacci tool downwards. So I drag it down, put the 100 mark level at the top of the swing, then drag it down the 0 level down to the bottom of the swing. Then what am I looking for? I want to see if the 50 level aligns with the 50 level aligns with this zone, this key level here. And also, if it does not, does the 61.8 do it? You see, the 61.8 is where the market is aligning. So after this place, I noticed that there was always a reversal, and the Fibonacci tool confirmed this, added to the confluence, this 61.8 level. So I waited, it pulled back a little to confirm it will go down. Then I went, it pulled back, it pulled up again. You see this pin bar candlestick. That's when I knew it was going to sell down. So I entered the trade. You see, it ran down, pulled back, and continued till it broke structure at this point, guys. So this strategy I'm showing you works almost on, in fact, on all time frames and all in all markets. All right, so let's check for another opportunity that came out, and I also made some good money with it. All right, now this has become a level now in the market. This has become another high. So since it has become another high, so I'll bring on my retracement tool again. Bring my retracement tool, pull it down to this level. Now you see this is a level where price has reacted for some times. See, there was a reaction in this level C, and it's the same place where we have the 61.8 level. So I saw it as a confirmed downtrend, and the market was going to reverse at this point after confirming with this Fibonacci retracement tool, So, and I went into the trade. You see, it sold and broke structure at this point, and still went down to here before it started reversing again. So guys, this strategy works. It works so well. You just need to practice it. You just need to practice it, and you'll be good. It will help you reduce the losses in the market. It will help you reduce losses. All right, let's look at another one now. Another opportunity with this same strategy. Now this is a high. I pulled this down. You see, guys, see. All right, so let me get the other arrow tool we used to point. So you can see that the price, this is a swing high, and this is the swing low. This is the swing low. I saw and enter the trade. Then what happened here was that when price got here, this one, the price stopped at the 50 level. The price got to the 50, it didn't get to the 60 level. It didn't get to 60 level, then it retraced. I did not enter this trade actually. So, but if you can see, you will notice that there's a kind of a consolidation here along this level that confirms that market may likely react if it gets here. So there was a reaction here, the market went down, then came back up again. So when it came back up again, and when I saw this, it was above this 50 level, I entered the trade. It came down. You see, yet it did not even break structure. It still went back up. This time around, it touched the 60 level, then sold off and broke structure. So this is what we can use to confirm our entries in the market and zones. Confirm some zones in the market before we go into trades, guys. So this works perfect. It works perfectly well. All you need to do is just to practice it. Like I've been telling you, just need to practice. Don't just go immediately see a strategy, you go on with your live account, your real account. You may end up losing money than you would make. So guys, you need to test this out. Now these are 50 level and 60 level retracement, and 31 if you are, like I said, I think, okay, let's go. Let me look for a crash. Let me look for another pair so we can test. Maybe crash 500. Let's let it load and see what's happening. If we can get a good retracement. Okay, let me test this. Alright, this is swing low. Where is the swing low I can use? Then this is a better swing low. Okay, you see now, when price got to this point, this is a swing low we are using, and you see price got to this, we are drawing it from the bottom. That's what I actually wanted to explain. In this case, since the market is bullish, so you are dragging the Fibonacci tool from the bottom to the top. That's what you are doing, dragging from the bottom to the top. So in this case, when I saw, if you see something like this, notice the market is bullish. What you need to do is for you to draw the how do they call it? You draw this, the Fibonacci tool, draw it from the bottom to the top. It doesn't matter which pair you are using. I'm just coming to crash 500. You can even, if boom, 500 is bullish, you can still draw it using the Fibonacci tool. You draw from the bottom to the top, guys. So but for this one now, let's just look at this. See, when the price got to retraced and got to this level 50, it danced around here. It couldn't get to 61.8, then it moved up, guys. So that is how it works. From 50 level, once you notice a confirmation that the price will be going up or is going to reverse, just look for confirmation patterns, and then or reversal patterns, then you go in to trade. Look at like this one. This is a pin bar, somewhat pin bar here, you see. So guys, this strategy works. It just requires you to practice it, practice and practice, to add to your confidence, add it to your confidences, that before you go in for a trade, guys. It works perfectly fine. Tried in different pairs. Now this 50 level and 61.8 sometimes depends on the market. It depends on the type of market you are trading, because most times, like most pairs, do not mostly reverse at 61.8, even at 50. Some will reverse at 38.2, some will reverse at 50, some will reverse at 61.8. So just practice back test it on all the pairs you usually trade and identify where they normally reverse. Then you take it for that particular pair and record it, and that's what you need to be using while trading on those pairs, guys. So I think this video is longer than I actually expected to do. Please just practice, and don't forget to like and share this video. Subscribe to this channel if you've not done that yet. Then we'll see you in the next video. Peace out.